Welcome to FO Talks. With me is Viral Acharya. He's a professor at New York University at the Stern School of Business, to be precise. He was Deputy Governor of the Reserve Bank of India, India's central bank. Welcome, Viral.
Thank you so much, Atul. Looking forward to the interaction.
Excellent. So, Viral, let's start off straight away. India's economic growth is slowing down. Why?
I would say there are two key reasons, Atul. One is that we did have a very sharp correction in India's growth and consumption after the COVID lockdowns. The lockdowns were quite severe. They dented economic activity quite substantially. Thankfully, the vaccines arrived. India was, at least with some delay, but well prepared, and then growth recovered. So growth recovered very sharply thereafter because of pent-up demand. Uh, in fact, because partly the base of the GDP had become quite low after the COVID-induced and the lockdown-induced correction. And a lot of stimulus was thrown, I would say, in terms of monetary stimulus, not just in India, but also globally. And that meant that Indian financial conditions were very easy for 2 to 3 years. Indian companies, their net worth increased because debt payments came down, their stock market valuations became very high. So for every company, everyone in India who was financialized, these assets became very valuable. They felt very wealthy. Similarly, houses became highly in demand. This was true the world over, as people either sought second homes, the wealthy sought second homes, funding costs for houses became low. And in many cases, India, in many states, also reduced stamp duties during COVID period as a part way of injecting stimulus into the economy. Long story short, there were many policy measures that were adopted to recover from the sharp correction after COVID. Many of them played out well. The wealthy felt very rich. They started consuming. They started consuming extra homes, extra cars. They started investing more in financial assets. They started investing uh, in imported goods, etc. And all of this kept economy's consumption going well for a while. However, as we know, the COVID lockdown was particularly bad for the other half of the economy, that is sort of more informal, more rural, perhaps to an extent, sort of in, I would say, agri or agri affiliated jobs. They didn't have as good a time. They don't borrow that much, so the monetary stimulus was not of that direct value to them. They are not financialized, so the paper gains of stocks, houses don't affect their consumption as much. And the fact that the rest of the engine was growing more on the back of consumption of the wealthy, many of those goods are not necessarily produced by the second half of India. And so that meant that the trickle down from the growth of the wealthy, the spending of the wealthy, didn't really reach the masses. So we are reaching a point of what one can call as a natural slowdown after such a large stimulus. To government's credit, it has also spent quite reasonably well on infrastructure post-COVID. It has reoriented its expenditure to spend more on capital expenditures. That also gave growth a fillip. But I think the reason why we are slowing down, and this is my second point, is that this savings glut of the rich, as I like to call it, which is that the rich are very rich, they are saving a lot, but how much can they keep consuming? For an economy to keep powering ahead, for an economy at the level of India's per capita GDP to keep powering ahead, we have to be continuously bringing more and more people and masses into a higher spending, higher consumption growth class. And what is missing right now is the consumption of the masses, because that is where India's growth potential is. That is where India has a long way to potential consumption. That is where if we unlock wealth, that is where if we unlock growth, things will happen more quickly. So I would say it basically the post-COVID K-shaped recovery and the further wealth and income distributional consequences it has had, which is causing the slowdown. And I would just say one final point on this, which is that, of course, the global growth is also in slightly rocky right now because the rest of the world also had massive stimulus post-COVID, notably the United States. United States actually got overheated. Some would argue it is still somewhat overheated. And therefore, interest rates had to be raised very, very sharply. But the inflation has gradually been coming down. Some of the higher interest rate effects globally are playing out in some sectors as weaker growth, and that has also meant a little bit of an external headwind to India's growth because some of the exports that we provide, notably in tech and non-tech services exports, they might also be slowing down with this global growth correction, also post the COVID policies. So, some internal issues, some external issues. Long story short, our consumption model has been focused too much on the consumption of the wealth. It needs to be more the consumption of the masses.
All right. You've just mentioned the masses, and in the past, you've said that India cannot rely on wealthy individuals to drive growth and expect the overall economy to grow. You've also warned against a debt-driven consumption trap for the poor. Um, my question is, uh, what other policies should India adopt?
Yeah. So sometimes to get to the good policies, it's good to sort of get to the right diagnosis. I'll just spend a little bit of time on the debt
Please,
trap
yeah.
for the poor and then segue from that into the policy. So as I explained, what's happening is that India did very well for about 2, 3 years from the post-COVID corrections. Nevertheless, our GDP and consumption haven't caught up to pre-pandemic trends, and that's partly, as I explained, because the consumption of the masses is missing. Now, of course, the poor want to consume. Why? Because if you give poor people 1 rupee, they have a lot of options for that. They might want to spend on education of their kids. They might want to spend on health expenditures. They might want to spend on expanding their consumption basket, maybe adding a set of vegetables that they have not been able to consume. But that's exactly why the poor's consumption has a lot of potential to grow. So poor want to consume. The savings are sitting with the rich. So invariably in these kinds of settings, the financial sector finds a way in one way or the other to redirect the savings from the rich to the poor. In case of India, simultaneously, we had the progress of the fintech revolution. Digital lending took hold. Even poor people are very often on payment gateways, recording some of their transactions, etc. And so we've had a lot of expansion of loans to first-time borrowers, which is happening entirely digitally as small ticket loans. And many of these are consumption loans. So you can buy a toothbrush on credit. You can buy a toothpaste on credit. You can buy your shoe or sandals on credit, etc. And so we have
That's
had
almost like the US. It's
yeah,
it's
yeah,
the
yeah,
counterpart
exactly.
of the credit card bubble. In the US, credit card debt has crossed $1 trillion, and interest rate on credit card debt is 22.8%. That was in the
Yeah.
last quarter. So that's mirroring the US trend.
Yeah, yeah, that's exactly right. And it shows that it also shows how much is the marginal propensity to consume, as economists like to call it, for the poor, which is that even at those high rates, they are willing to borrow to consume because actually their propensity to consume and alter their basket, improve their utility out of an extra rupee is very, very, very high. And that's true for poor all over the world. So essentially, we got this surge of savings coming from the rich via different parts of the financial sector, creating unsecured consumption credit for the poor. Now, this creates what economists have called as indebted demand, which is that if a growth shock happens, then the debt remains, but the earning prospects of the poor have not necessarily improved or maybe perhaps even deteriorated. So the real thing we have to solve is twofold. One problem with this consumption of the poor loans is that it could risk financial stability. Okay, that's a problem for the banking system and the non-bank financial institutions. On this front, India has adopted the right policy. In my view, the Reserve Bank of India in 2023 and 24, noting that the pace of growth of consumption loans, especially at the lower income of the pyramid, was very, very high, double digit, maybe sometimes even crossing 20% annualized. They've sort of thrown sand in the wheels of that growth, and the lending has come down. I understand there is some rotation issues of some secured loans being called unsecured and vice versa. But I would say by and large, they have sort of at least temporarily slowed down, thrown some sand in the wheels of that excess. But the second key point I think that you are getting at is how do we deal with the fact that the poor aren't earning real wages that are growing fast enough. Sometimes not even their nominal wages are not even growing as fast as the inflation, even though for formal salaried workers, real wages are far in excess of zero, meaning the nominal salary growth is typically far in excess of inflation. And the question we have to really ask is India creating enough high quality and quantity of jobs at the bottom of the pyramid? Is there really a trickle down from the consumption of the wealthy, the growth that is manifesting itself in the stock market? Is that really reflecting in the real side of the Indian economy? And it seems no. And I'll give you two indicators here which are quite telling. One is that in the last 5 years, agricultural share of jobs in India was in excess of 50% of the new jobs that were created. India historically, of course, used to have 60 to 70% jobs in agriculture. We brought that down closer to 40% following our liberalization reforms since 1990s. But in the last 5 to 10 years, we seem to see a little bit of a regression in this trend, which is that the new job creation, rather than shrinking the agricultural economy in workforce, because it is also now not adding that much to the GDP, it's less than 15% of GDP. So ideally, you want to move more and more people into higher growth services, higher growth manufacturing, higher growth ancillary services sectors, etc. But that is not happening. Even in the last 1 year, actually, more than 50% of new job creation is in agriculture. This is basically a sign that the hinterlands of India, which are not the formal urban capitals, they are not anymore creating enough jobs to absorb the excess non-agri workforce from the hinterlands into these urban capitals. This is not to
And you
say
mean
that India
states
is
like
not
UP,
urbanizing
Bihar?
well. Yeah, go ahead. Yeah.
You mean states like UP, Bihar,
Yeah,
Viral?
yeah, of course, they are the biggest suppliers of some of these labor, and for a variety of reasons, they will continue to do so. And so I think we need to really ask a question, do we have a policy, do we have an economic policy that works for creation of high quality jobs at the bottom of the pyramid? And in my view, it requires at least two distinct uh, forces which need to work together. One is that we need to create first high quality jobs, which is private investment in the economy has to become buoyant. A lot of the support for the Indian economy, as I said, has been coming from government expenditures or from excess consumption of the rich. But we need to make private investments in the economy to manufacture and provide services, not just for India, but also for the rest of the world, much more than we are currently doing. Our services share of global trade has increased, but we need to be at a much higher level. Our share of global manufacturing is pretty much stagnant in spite of growing at such a fast level over the last 3 to 4 years.
Manufacturing has fallen from 16% to 13% in the last
Yeah.
10 years
Yeah,
of the
but
GDP.
actually, the
So,
global share of trade is even just single digit and not moving at
correct.
all. So, India needs, as a
Exactly.
large economy, to be a much, much bigger player there. Now, that requires opening up of the economy, opening up of some more sectors and liberalization, reduction of tariffs, so that foreign capital can come in, compete with our companies, get them actually to be more efficient at producing global products, global services. And then we need to do far more of this so that we are creating high quality jobs in India. And then simultaneously, we need a policy that the demography of India, which is currently in the informal agri-rural economy, it needs to be capable of actually picking up these jobs. So it needs education, it needs good health, it needs a way to actually get some vocational training to be useful in these jobs. Now, whether that's IT, whether that is some other kind of jobs, carpentry, we can discuss exactly what that is. But it needs a weaning away of this re-burgeoning agri workforce. We need to wean it away back to other sectors, but of course there have to be jobs in the other sector to absorb them. So you have to create jobs, which is basically supply of jobs, and then there has to be a demand for these jobs, which has to come from the training of the agri workers. I want to make one final point, which is that ultimately the goal is not just to create jobs. India does create jobs. This is a point that people keep making. India does have jobs, but unfortunately, they are low quality jobs at the lower end of the pyramid. They are not generating enough real wages for these workers, and then you can't get consumption of the masses that we are talking about.
Brilliant. These are things that many people have talked about, and these are common sense things. But a lot of people blame the government for number one, demonetization that killed the small and medium-sized sector. Number two, for rolling out the goods and sales tax in the middle of the financial year. And three, for following a protectionist policy, which uses both tariff and non-tariff barriers. So many people have told me that their goods are sitting at ports, and and do you think that all these three reasons are responsible? And if so, what should the government do?
Yeah, and I would add sort of, the part natural, part human reason, which is also COVID. I think COVID was also a pretty bad
Yes,
shock
you
actually
already
for the
mentioned that, so
informal
that's why I
economy.
didn't bring
Yeah,
it
yeah,
up.
yeah. So in a way, you're spot on. It has been a series of shocks over the last 10 years for this economy. And therefore, in my view, we have to think out of the box. I think we have to see, because sometimes if you don't accept that what I tried has worked, but it has worked only in part X. But in the 1 minus X of the economy, it hasn't really worked. If you don't acknowledge that, sometimes it's hard to shift gears and make the adjustments. I think I do get a feeling that there's a sense in the government and the economy and the ministries that this is an issue. Maybe the recent budget and its slightly greater focus on MSMEs and the middle class is a reflection of that, but I think it needs to be below the middle class as well. I think the problems are not just at the middle class level. I think it's actually much worse below the middle class. Uh,
The
but
middle class is suffering too.
middle
Middle
class is
class,
suffering
everyone
too. Yeah,
talks of
yeah,
the
yeah.
cost of
In
living
fact, many of
crisis.
them are the ones who are in the consumption loans that we discussed, because, of course, at the very bottom, we don't have the credit that I was talking
Yeah.
about. But I think you've touched upon sort of two issues that I would stress. One is that I sort of just gently touched it, which is that we do need to reduce our protectionist barriers, even though the world might be moving in the direction of tariffs. There is a lot of trade to go around in the world. Perhaps there will be even more trade if the rest of the world is adopting tariffs. We can actually make a big step forward if we do a further round of liberalization reforms, rationalize our tariffs. Not everything needs to collapse right away, but businesses need predictability. They need a path. If you give them a 3 to 5 year path of near rationalization of tariffs to reasonably low levels, I think that would create a fair bit of predictability for foreign companies to send their goods to India, set up shops in India, and that is the key point, is that that leads in technological transfer that will make our what I call domestic tigers, our sort of local companies who are very large but not necessarily producing global brands. It'll get them to lift the quality of their products, make them more efficient, perhaps produce foreign quality products in India but at lower costs, which then are suitable for exporting to the rest of the world. I think we need to become this way through efficiency, productivity, competition. a better part of the global economy. And in fact, the fact that our companies are protected both from tariffs and perhaps through some sort of desire to create national champions means that they are not investing enough, because a concentrated industrial sector says, why should I compete for my customers as aggressively if I can charge them a hefty margin and they have only my goods to buy? So a sign of a less competitive oligopolistic economy is that you get lower quality products with low private investment and competition and slightly higher markups. These companies are loved in the stock market because they have a very steady profit margin that they can keep delivering on year after year after year without shocks coming from competition, having to innovate, etc. And of course, that leads to a slightly stagnant, static, not so dynamic an
Yeah.
economy.
No, I always call it Sanatan socialism. Manu Sharma, my um, colleague who's a partner at FOI, he came up with the term Sanatan socialism when Modi passed the 2019 budget before the elections. And in a way, we are reliving the Nehruvian era policies, which also wanted to build domestic champions. And then both of us are old enough to remember we were left with the fat and ugly ambassador for years that was overpriced, and we had to wait to get it as well. So we are not that in such a bad situation, but you talked about the lack of efficiency and productivity
Yeah, and
and
I think the
competitive.
key to I fully agree with you, Atul, and that is exactly the danger we have. And I think just to put it in a little bit of a slightly different perspective, so competition in India has increased. Okay, and that's because prior to 1990s, we just had state-owned enterprises, as you
Yeah.
mentioned, producing the ambassadors of the world.
Which as someone calls the private sector, the public sector is the private sector of Indian administrative service officers, the
Yeah,
IAS, the heaven born
exactly.
elite that rules India.
Exactly, exactly. So we have certainly deserved and increased competition substantially from there. But what has happened is now we are seeing a reversal. The concentration in Indian industries is now increasing again because a few large domestic companies are acquiring disproportionately large share in within individual sectors as well as having a breadth across several sectors. So in terms of the quantity of assets that they own, it has become very, very large. And to me, even if we are not back to the pre-1990s levels, it's not good enough because the Indian demography needs a certain level of private investment and job creation month after month after month. Not just jobs, but high quality jobs, jobs that have high value added relative to agriculture, jobs that can give them real wages which are positive and enabling them to move their consumption towards the potential consumption levels of India. And therefore, I feel sometimes the growth, people get caught up in our growth numbers being higher than the rest of the world. But it's not good enough. That comparison is not good enough because the question we have to ask is what growth does our demography need in order to deliver its potential consumption and potential output? Why are we still below the pre-COVID trends of GDP and consumption? Something must have has gone awry. Something has become missing as a permanent feature of that gap. We need to find a way to unlock some growth potential that can close that gap. So, at a minimum, it requires thinking out of the box. Most likely, it requires doing something different than what we have been doing in the recent past.
Very good. Viral, I know you are pressed for time, so I'm going to ask you about monetary policy. And since you were in the Reserve Bank of India, RBI, I'm going to ask you a question that's on everyone's minds. $1 is now worth more than 87 rupees. And dollar has strengthened against many currencies because of the tariffs, paradoxically, this flight to safety or the safety haven effect, the safe haven effect. Um, how far is the rupee likely to fall against the dollar?
That's sort of very hard to predict. It's a very large market. Rupee is now trades in several tens of billions of dollars on a routine basis. The only thing I would say is that, as you mentioned, there is a general dollar strengthening. Rupee has therefore depreciated as well. Probably rupee volatility had been too low over the last few years, and maybe it's a bit natural to actually absorb some of this adjustment through where the rupee perhaps belonged in the first place. That might be good to some extent in the short run for the exports of the economy. But I would say, by and large, my concern is not the exchange rate. I think India has, the central bank has adequate reserves, even if it allows a little bit of depreciation to occur at a faster pace. It has enough resources to deal with that. I think the key question to maintain always in this kind of turbulent and uncertain global economic times is to maintain the inflation credibility of the central bank. Apart, the reason, of course, why rupee is depreciating is because one rupee is not able to purchase the same real goods given higher inflation in India than in some other
Exactly.
parts of the world. And so, as long as you maintain the inflation credibility of the central bank, usually you don't get tantrums from markets on your currency. You can deal with graceful absorption of the risk via some appreciation, some depreciation, etc. The only thing I would add, as I've said at my Nimrana remarks as well, which is now in an interview on the web, that it's probably not a bad idea for the central bank to allow reasonable amount of natural volatility in the rupee, because if you kill the volatility of the rupee altogether as a central bank by managing a particular level, then importers just stop hedging. And exporters stop hedging. And you don't want that. You want a private level of defense first. And then, if the shock is very large so that those defenses are not working, then you want the central bank to manage excessive volatility at that point of time.
So is this a veiled criticism of Shaktikant Das, former RBI chief, who many economists blame for losing 90 to $100 billion in managing exchange rate volatility? Do you think
No,
Shaktikant Das was being wise?
yeah, I don't know what was the exact thinking. It could be sometimes there are foreign flows coming in. Maybe there was a lot of infrastructure spend. They wanted to keep the cost of capital low for that. So maybe they were trying to bring the wall down to reduce the risk premium or something like that. It's hard to know what exactly was the thinking or the decision making and who made these processes. But in all fairness, I would say, regardless of that little bit of killing of the wall of the rupee, I think the external sector of India looks, in my view, in fairly healthy condition. The
Mhm.
RBI has both
Despite
the resources.
despite the
Yeah,
loss of forex
exactly.
reserves. Yeah.
Yeah, exactly, exactly. I think regardless of that, I think we don't need to worry at all, in my view, on the external sector. Of course, shocks can occur, but I think the Reserve Bank of India is, over the last few months, certainly allowing a little bit more natural depreciation of the rupee. I wouldn't say it's directional, it's allowing more volatility in the rupee. In my view, that's healthy because it gets the private sector also to manage its foreign exchange risks.
Now, FIIs, foreign institutional investors, have been selling their portfolios since October 2024 and exiting the Indian market. That's putting downward pressure on the rupee too. My question is, why are they doing it? And what are the consequences of this FII pullback?
I think two things. One, some of it could have been linked to this sort of, the factor I mentioned that if you kill wall, you bring the money in, but then at some point you have to absorb the wall and then the money goes out. But I think it's also coincident, as you said, with the change in the polls in the United States suggesting that, the likely president was going to be Donald Trump and then his eventual election. There's a little bit of a massively aggressive, perhaps even frothy bet going on in the world on the US right now, where, in spite of there being so much policy uncertainty, the US stock markets have been on a tear. The
Not anymore.
long-term, yeah, exactly. Long-term US rates have been rising, dollar has been strengthening. So a lot of those factors have been bringing the dollars back into the US investments. I would say personally, we have to give this a little bit of time and see how it plays out. because the policy mix right now is such that uh, one can't really take this reversal of flows into the US necessarily for granted. We have to wait and see how so much shaking up of the US and the world apparatus of how to go about doing things plays out in the market. So perhaps the Indian market was itself in need of some sanity check and a correction. Uh, and maybe sometimes when markets don't sort of reward you more than what you deserve, you actually introspect and think about what the real problems are, how the policy mix needs to change, and maybe it's a good time to do that, in my view, for sake of the Indian demography.
Viral Acharya, thank you very much for your time. I hope to see you back. Lovely discussion. Um, and those of you who've been watching this, make sure you subscribe to our YouTube channel. You will get voices from around the world. In fact, we have um, 3,000 authors from over 90 countries. Thank you very much.
Thank you so much, Atul, for having me. It's a great pleasure to interact. Look forward to doing it again at some point in future. See you.
Join the conversation at Fair Observer and subscribe to our YouTube channel.